Air Products' new CEO just made a promise that could make or break this stock cash flow positive by next year, after the company took a devastating $2.9 billion loss. Air Products, ticker APD, is the world's largest supplier of industrial gases, serving manufacturing, healthcare, and energy sectors with a 21.7% global market share. But here's what makes this story compelling. New CEO Eduardo Menezes is betting his reputation on a dramatic turnaround, but here's what could cost you if you're not careful. APD just took a devastating $2.9 billion hit in Q2 2025, writing off 3 failed hydrogen projects, including a massive $2.3 billion after-tax loss. Their debt-to-EBITDA ratio sits at 2.23 times versus competitor Lin's much safer 1.78 times. Even worse, they're trading at a PE of 41.7 times compared to Lin's 33.6 times, meaning you're paying a massive premium for a company that's struggling to execute its core strategy. However, while everyone else panics about these project failures, here's the massive opportunity smart money is watching. Air Products secured a landmark 15-year take-or-pay agreement with Total Energies to supply 70,000 tons per year of green hydrogen starting in 2030. This isn't just any contract, it's backed by their 4 gigawatts. Saudi Arabia, project that's still on track for 2026 startup, with over 70% non-recourse financing already secured. With 50% of their revenue under long-term contracts and an industry-leading 41.7% EBITDA margin. They have an incredible moat. Plus, they're taking an approach that most people are completely missing. While competitors focus on traditional industrial gases, Air Products is positioning itself as the infrastructure backbone for the entire green hydrogen economy. They expanded membrane manufacturing capacity and launched multimodal hydrogen fueling networks across North America and Europe. With $10 billion in annual operating cash flows and analyst consensus price targets at $333.93, that's 15.7% upside from current levels. Institutional investors like Capital International just increased their position by 4.6 million shares. All of this comes together when we see if CEO Menezes can deliver on his promise. His pledge to be cash flow positive by next year, after these massive write-offs, will be tested in Q4 2025 and Q1 2026 earnings. Hit that target, and he proves they can execute. Miss it, and investor confidence could flatten. What do you think? Bullish or bearish on Air Products? Want the complete research reports? Drop a comment below.